In case of machinery, we always go for additional depreciation. PV of tax saving, present value of tax saving. How do you calculate this? Net outflow. What is your net outflow here? 4 minus 7. At the end of 5th year, your machine value is gone. You can use that machine for how many years? Max to max 5 years. A warm welcome to one and all. This is your ALsir here, lecturing Vidhyaashram First Grade College, the Temple of Excellence. And now we are discussing your corporate tax planning, Unit 4 and Session 2. Easiest problem, as you know that because we have done in the previous session. It is nothing but own fund or borrowed fund. So we'll discuss another 2 problems in today's session. So concentrate. Not only just concentrate, take pen and paper, work out this problem along with me so that there won't be any confusions while doing problems. Now, so this is your tax planning and managerial decision. So management can take decisions. Can I go for own fund or borrowed fund? So what do you mean by own fund or borrowed fund? Like you have 10 lakh with you, you will start your business. You will purchase one machinery from your 10 lakh rupees. What is the advantage in this? You are not supposed to pay interest. Hope you are clear. You have 10 lakh rupees with you and you are invested the 10 lakh to purchase machinery. So in this, the main advantage is you are not paying interest because your own money. The same 10 lakh you have borrowed from bank. Like you want to purchase a car, what you will do? There are 2 options are there. One, you can go for a bank loan, or else you can pay your own money. If you have 10 lakh of savings, you can pay that. In the 10 lakh, you will get your car. But if you take loan from bank, that 10 lakh car will become how much? It will become 15 or 16 lakh if you add all your interest till you complete your loan amount. Now, these are the things we are going to discuss, which is better. So directly you can say that your own fund is better, but it is not. We have to calculate, then only we'll get to know whether which one is better and which one is not good. Now, your agenda is simple. Problems on purchase of asset by own fund or borrowed fund. Problem number 3. Cost of the asset under consideration of 3 lakh. So what is the value of the asset here? The value of the asset is 3 lakh. Of the asset 5 years with a residual value of 10,000. Rate of depreciation 15% per annum. Additional depreciation 20%. Remember, in case of machinery, we always go for additional depreciation. Again, I'll repeat. In case of machinery, always we go for additional depreciation. What do you mean by additional depreciation? It is nothing but machinery is the highest value actually normally. That's why we take 2 depreciation in the first year. One will be normal depreciation. One more is additional 20%. Always remember this. Now, this applies only for what? 15 plus 20%. This applies only for first year. Now, effective marginal tax rate. Remember, this tax rate will change this year. In the question paper, whatever tax rate is given, that is only you are supposed to consider. PV factor 10%. In this problem, the PV factor is how much? 10%. Now, here 1, 2, 3, 4, 5. You are doing this calculation or problem for how many years? You are doing this calculation for 5 years. Now, 0.909, 0.826, 0.751, 0.683, 0.621. You know how to calculate this PV ratio also. PV factor, very simple. Like they have given 10%. So how much it is there? 10, 0.826. You can take your calculator. So 10%, 0.10 divided by 1.10. I got 0.9. Yes, 10 divided by. So your 10% in the sense 0.10 divided by 1 plus rate. So 0.10 divided by 1 plus 0.10. 0.10 divided by 1.10, you will get 0.909. Very simple. If it is 12%, how do you calculate? 0.12 divided by 1 plus 0.12. So similarly you calculate, you will get your PV factor. Nothing to worry. In examination they will only give you the PV factor. No need to calculate because you are not doing your financial management. You are doing which subject? Corporate tax planning. Under corporate tax planning, they will not give you to work out what is your PV factor. The PV factor will be readily available in the question itself. Now, in this, assessee has two alternatives for decision making, which are those like purchasing asset out of his own fund, your own money, or purchasing asset by borrowing from public deposit at 10%. Your own fund, you're not supposed to pay interest. If you're borrowing from outside, you're supposed to pay interest of how much? 10%. Remember this. Now, so interest per annum, where interest is paid annually, the principal paid at the end of the 5th year. When you are repaying the 3 lakh rupees at the end of your 5th year. So these are the informations are there. First we'll go for own fund, then we'll go for borrowed fund. Easiest one first. Solution. If own fund are invested. Now, as I told you, there are two options are there. What is the value? 3 lakh. If you have savings of 3 lakh, you can invest that. If you don't have savings, borrow from outside. You have to pay interest of 10%. Now, first option is what? Your own fund. How much you are investing? 3 lakh. What is your cash outflow? 3 lakh. Hope you are clear. That is the first one. So it is in the beginning of the year. So we call it as 0. Now we'll start from 1st, 2nd, 3rd, 4th, 5th. Your investment is 3 lakh. What is the depreciation on that 3 lakh asset? Very simple. On 3 lakh, one is 15%. On 3 lakh, additional depreciation of 20%. Total 35% first year. Calculate. So 3 lakh into 35%, you got 1,05,000. Any doubt? No doubt. How to calculate second year? Very simple. Your value is how much? 3 lakh. What is the first year depreciation? 1,05,000. How much it is? 1,95,000. On that 15%. Again, don't calculate this 20. This 20 is applicable for only what? First year. Now, in the previous session, I explained you all this. Remember that. Now, 1,95,000 into 15%, you will get 29,250. Similarly, what you are supposed to do? Whatever answer you got, you minus this 29,250. How much you will get? 0,575. 1,65,750. I'll cross check once. 165,750 plus 29,250. Yes, it is proper. So similarly, on this, what you are supposed to do? Into 15. Like this, you are supposed to calculate. Minus, calculate. Minus, calculate. Like this, you are supposed to do. Now, so you got depreciation of these things. This is done. Next, what is the next column? PV of tax saving. Present value of tax saving. How do you calculate this? Now, you take 1,05,000. Yes. What is the tax here? What is the tax? 26%. 26%. And what is the PV factor for first year? I'll go back. Your PV factor for first year is 0.909. 0.909. Multiply all this. You will get 24,812. Hope you are clear. Yes. Similarly, here also same thing. Take 29,250 multiplied with 26%, multiplied with PV factor, second year, 0.826, 0.826. If you calculate, you will get 6,286. Similarly, calculate for the third one, fourth one, fifth one. These are called as PV of tax saving, present value of tax saving. Now add this 24,816, 6,282, 4,855, 3753, 2900. I got 42,606. What is the tax saving? If you go for your own fund, your tax saving is 42,606. Now we'll go for your borrowed fund. Own fund calculation is this much only. You have to start 0, 1, 2, 3, 4, 5. It is a 5 years. Cash return down value. Your 3 lakh is your investment. Then 3 lakh in the first year. After doing this, 3 lakh minus your first year depreciation. This minus this minus this minus this. Hope you are clear. Yes, remember you are supposed to minus 3 lakh minus your depreciation, you will get 1,95,000. 1,95,000 minus your depreciation, 1,65,000. 1,65,000 minus depreciation, 1,40,000. 1,40,000 minus depreciation, 119. So it will be 17,963. Hope you got it. Yes. Now you are supposed to add only one column. That is what? PV of tax saving you are supposed to do. So what is this? Depreciation, tax saving, your present value. Hope you are clear. Yes. Now we'll go for borrowed fund. You are done with own fund. Now you are doing what? Borrowed fund. Remember, we are doing borrowed fund. Don't mess up. Don't mix. We are doing borrowed fund. Now 0, 1, 2, 3, 4, 5. You are investing or you are taking loan? You are taking loan. Do you have any outflow in the 0? No. This is nil. Because you are not investing. You are taking here. You are borrowing from outside. So your 0 year will be 0 only. If your own fund is there, your cash outflow will come. There is no own fund. You are borrowing from somebody. So own fund will be 0. Then interest. So how much you are taking? 3 lakh. What is the interest you are paying? I'll show you that. From public deposit, you have taken 3 lakh. You are paying 10% interest. Now, first year, 3 lakh into 10%. 3 lakh into 10%. Second year, 3 lakh into 10%. You are not paying installment. You are taken 3 lakh. At the end of the year, you have repaid that 3 lakh. I'll show you that. The principal is paid at the end of the 5th year. See, I'll give you an example. I have taken 3 lakh from you. So every month, how much I have to pay interest? 10%. 3 lakh into 10%, how much? 30,000. And there is an agreement between me and you. I'll not pay that 3 lakh now. I'll pay when? At the end of 5th year. Up to 5th year, that 3 lakh is with me only. First year, I'll pay interest. Second year, I pay interest. Third year, I'll pay interest. Fourth year, I'll pay interest. Fifth year, I'll pay interest. Along with, I'll pay you back 3 lakh also. Got it? First, second, third, fourth year, I'll pay only interest. But the 5th year, what I'll do? I'll pay interest plus your 3 lakh. Total, I'll pay you 3,30,000 at the end of 5th year. Now, I'll come back to this. Third year, same. Fourth year, same. 5th year, your interest is 30,000. Now, your cash outflow is how much? First year, you're paying 30. Yes. Second year, you're paying 30. Yes. Third year, you're paying 30. Yes. Fourth year, you're paying 30. Yes. 5th year, along with 30, I should repay that your loan. 3 lakh plus 30, it is 3,30,000. I'm paying interest also. I'm repaying the loan amount. What I borrowed, I'm giving you back 3,30,000. Up to this, hope you're clear. What is the next one? Depreciation. Remember, don't calculate depreciation again because already you calculated. Go back. You're invested your own fund. What is depreciation? 1,05,000, 29,000, 24, 21, 17. Same thing you can copy. 1,05,000, 29, 24, 21, 17, 963. Hope you are clear. Yes. Now, interest and depreciation. See the numbers they have given. What are those numbers means? This is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So these are the numbers I have given, column number, so that easy to calculate. See, up to this column 1, 2, 3, 4, you are clear. Now we'll come to column number 5. What is this? Depreciation. This also you are clear. 1, 2, 3, 4, 5. Up to column number 5, you are clear. Now, how much you are spending actually? If it is own fund, your own money, do you pay interest? No, because no interest for that. But in this, you have to pay interest also. You have to deduct depreciation also. Both are your expenses. Your this plus this, 3 plus 5. What is 3? Interest. What is 5? Depreciation. This plus this is equal to this one. Hope you are clear. 30 plus 105, 135. 30,000 plus 29, 59,000. 30,000 plus 29, okay. 30,000 plus 24, okay. 30,000 plus 21, 30,000 plus 17, all are your interest plus depreciation. What is your total expenses? It is showing. Hope you are clear. Yes. Up to this, we are done. Next one is tax saving. What is a tax saving? Last problem also we did. What is a tax saving? Your actual depreciation, PV factor, tax. Similarly, in this one more will be added, interest. Already added interest plus depreciation, 1,35,000. 1,35,000 into 26%. Your tax percentage multiplied with this. Here also 59,000 multiplied with 26%. 54,000 multiplied with your tax. Your column number 6 multiplied with your tax rate. In the question paper, they have given 30%, you take 30%. 35%, you take 35%. It will keep changing, depends on your financial year as well as assessment year. Up to this, you are clear. Net outflow. What is your net outflow here? 4 minus 7. 4 is what? Total outflow 30. Here it is how much? 35. You have more than your outflow. 30 minus 35, 5,100. 4 minus 7. This is 4 minus 7. Now, again, what is your column number 4? 30,000. What is your column number 7? 15,000. 30 minus 15,000, 14,000, 15, 16, and 3,30,000 minus 12,000, 3,17,000. Hope you are clear up to this. Every problem under own fund and borrowed fund, exact procedure. It will not change. Exact what we are doing, that only you will get. Hope you are clear. Yes. Up to column number 8, we are done. Clear? What is column number 9? Simple one. Your PV factor. Write all the PV factor. It is already given in the question. See? 0.9, 0.8, 0.7, 0.6, 0.6. These are called as PV factor. Now take this PV factor. You have written. Multiply now this into this. Multiply. You will get 4,636, 12,000, 11,000, 11,000, 1,97,000. Hope you got Yes, this is all about your calculation PV of net cash outflow in case of borrowed fund. Hope you are clear. These 10 columns you have to remember. So work out twice or thrice, nothing, no formulas, nothing, only writing. If your calculator is perfect, your calculation will be perfect. Now, so I'll show you the calculation. So I'll take one by one. The first one is negative value. I'll add from this. 1,97,186 plus 11,410, 11,817, 12,055 minus 4,636. I got how much? 2,27,832. If you go with the fractions, you may get 833, 1 rupee difference. Clear? Now, so we're done with all the calculation. Hope you're clear up to this. Clear? Yes. Now, so we'll do continuation of your borrowed fund. Now, how much I got? 2,27,832 or 833. Now, 2,27,833 and at the end of 5th year, your machine value is gone. You can use that machine for how many years? Max to max 5 years. After 5 years, that is scrap actually. That is scrap. Then what happens? Your outflow is 2,27,000. Just assume that you bought one mobile. So mobile price is how much? After doing all the calculation, you got 2,27,000 something. After 5 years, your mobile value gone. You cannot use your mobile. What you will do? You will give it to somebody at a lesser price. At what price? Assume that 5,000. Whatever you are spending, 2,27,000. After 5 years, you will get 5,000. That is your income. 2,27,000 minus 5,000. The remaining will be your actual outflow. Hope you are clear. Yes. Similarly, 2,27,833. What is the scrap value? I'll go back to question. They have mentioned that asset 5 years with a residual value of 10,000. See, after 10 years, after 5 years, you will get minimum of how much? 10,000. Can you take 10,000 directly? No, because today's 10,000, after 5 years, the value will be what? Less. Like today you are getting 1 liter fuel for 105 rupee. The same 105 rupees if you give after 5 years, you may get half liter. Clear? Similarly, the money value decreases. So 10,000 you convert to PV factor. You convert to PV factor. I'll show you. 10,000 multiplied with 5th year, right? What is the 5th year PV factor? 0.621. Now, 10,000 into 0.621, you will get 6,210. If you minus, your outflow is 2,21,623. Hope you are clear. This is all about your borrowed fund. If you go with borrowed fund, your outflow will be how much? 2,21,623. We are done with your borrowed fund. But your own fund, we have not yet completed. I'll come back. See, tax savings you got 42,606 in the own fund. I'll show you that. 3 lakh is your investment. Your tax saving is 42 minus you got 2,57,000. At the end of 5th year, you will get your scrap value that is already calculated 6,210. Along with that, you will get total saving on set of short-term capital WDV minus scrap into tax into PV of 5th year. Like this is applicable only for own fund. Own fund only it is applicable. How do you calculate this? Very simple. I'll show you. Go to own fund. Just add your depreciation. Now, your depreciation means WDV value. In the own fund, 1,19,754 minus 17,000. How much you will get? So I'll calculate the last year. We ended in the 5th year. 1,19,754 minus 17,963. I got 1,01,791. 1,01,791. If you minus this, you will get answer 1,01,791. That is a WDV value. Take WDV value. 1,01,791 minus your 10,000, your scrap value, multiplied with 26% tax and your PV factor. Remember, the WDV minus scrap into tax rate into PV factor. This is only applicable for own fund. If you do, you will get again 14,000. Total is 21,000. Your final answer 2,36,363. These are your outflow under what? Under your own fund. What is the answer under borrowed fund? 2,21,000. What is the answer under own fund? 2,36,361. Now you are supposed to say which one is better. This is borrowed and this is own fund answer. Okay, little lengthy actually, but it will give you 15 marks. Remember, no extra adjustment, no extra calculation. Whatever questions I have discussed, exactly. Name will change, number will change, percentage will change. Other than that, nothing will change. Exact kind of problems you will get. Now, so your answer will be what? If you go for own fund, your outflow is 2,36,000. Borrowed fund 2,21,000. I'll show you 2,21,000, 2,36,000. And this is rejected. Why? Because high. This is accepted because it is low. PV of net cash flow is more. PV of net cash flow is less. This is all about your reason and justification you are supposed to give. Hope you are clear. Yes. So I'll go back to your previous slides so that you can take screenshot. So your problem number 3. So your solution part. Under borrowed fund, your answer own fund. Your analysis of decision. Yes. Now we'll go to your problem number 4. Under problem number 4, what will happen in the sense? Cost of asset, exactly what we did now, the same thing you are going to do. Cost of asset under consideration 3 lakh. Life of the asset is 5 years with the residual value is rupees 10,000. See, the same thing, last problem also it was how much? 10,000. Last problem also what was the value? 3 lakh. I'll not explain you much, you are only supposed to do, but I'll give you the hint. Depreciation, last problem also 15, here also 15. Additional last problem 20%, this problem also 20%. Now, next, what is the PV factor? 10%. First, purchase the asset out of his own fund. First one. To take the asset on lease. Remember, we are not doing own or borrowed fund. We are doing what? Own or lease fund. Own or lease fund. We are discussing own fund or lease fund. Now, as per this, what is the lease amount? 85,000 per annum. Payable at the end of every year of lease. You are supposed to pay lease of 85. There is a own fund, same calculation. Lease fund, little different calculation. I'll show you that. PV factor, yes. Own fund, we already done in the last problem itself. Your 3 lakh, your net cash, your own fund, this one, 1 lakh 5, 29, 24, 21, 17. These are the depreciation. Own fund, remember, you will get 3 lakh of outflow. This is what? Outflow. Now, this is your own fund. We have done already in the last problem. So, last problem we already calculated. 3 lakh minus 42. Like what is 42? 606. 42,606 minus your scrap value minus this one, you will get 2,36,000. This is done. This is what? Own fund. What is the outflow? 2,36,363. This is done. Now we'll go for the lease fund. Now, so lease, you have 85, 85, 85, 85, 85. So how to calculate this lease? Very simple. Your PV factor, you are supposed to calculate 0.909, multiply, you will get 77, multiply, you will get 70,000, multiply, you will get 63, multiply, you will get 58, multiply, you will get 52, 785. Hope you are clear? Yes. Now, what is your tax rate? 26%. Calculate 26% for all. This answer multiplied with this. So why this blank means for the calculation purpose. 77,265 multiplied with 0.26 and 70,210 multiplied by 0.26. Or else you can take it as 26%. 63,835 multiplied with 0.26 and 58,055 multiplied with 0.26 and 52,785 multiplied with 0.26. Hope you got it. Just multiply with tax factor. Why? Because PV factor already we calculated. If you multiply, you will get answer of this. Then what you are supposed to total? This one. Okay, not this one, this and this. If you total, you will get your answer 77,265 plus 70,210, 63,835, 58,055, 52,785. So I'll get 3,22,150. 3,22,150. Remember, in case of lease fund, we don't calculate depreciation. Why? Because it is not their property. They have taken on lease. Like you have gone to some house on lease or rent. Will you pay the property tax? No. Will you pay depreciation on that? No. Will you pay EMI of that house? No. Why? Because that does not belongs to you. Similarly, depreciation also they cannot charge under lease fund. Now, so what is the total of this? 20,089 plus 18,255 plus 16,597 plus 15,094, 13,724. So 83,759. So these are the savings and these are the outflow. Remember, from this you are supposed to minus this. Then only you will get net cash outflow. Remember, from this you are supposed to minus the savings. I'll show you the calculation. So it is double calculated. You can calculate here. You can consider from here 3,22,000 minus 83. 2,38,392. If you go for own fund, 2,36,000. If you go for borrowed fund, 2,38,000, which is costlier. This is expensive. Go for this. Accepted, rejected, because it is less, because it is more. Hope you got it. Yes. This is all about your today's calculation. We worked out two things: own fund and borrowed fund. Own fund and lease fund. Everything we have to calculate on the basis of your tax saving. Now I'll go back to your previous slide. Second problem. So you can take screenshot. Your problem number 4. Your solution part. Your solution part. Own fund. This is your under not borrowed fund. This is nothing but your lease fund. Then your answer. So this is all about your today's session. Unless and until you work out, you don't understand, please work out at home. Thank you.